Okay, quick Thursday morning radar update. So we are, what is it, day 2 or day 3 into a pullback? Depending on what market you look at. Very normal action. Portfolio's 0.3R down on the week. Could be recovered very easily. Let's just quickly have a look through these markets. FTSE 100, we've just punched through the lows and we're back into the opening range. Same with the DAX, that's actually quite good action. We're just, obviously the more risk on areas of the market being the 250, a bit lower in the risk fountain, and the small caps obviously being on the bottom tier, a little bit softer. Let's just quickly look through these markets. I'll just first start with the Nasdaq comp. Extremely normal action. Potential sort of base in play there. Potential stage one. Bull markets are born from bear markets, and technically we're still teetering on the edge of being in the bear market. Well, we're in a bear market. The longer time frames are down. The shorter time frames are trying to tick. Well, they are ticking up. Whether they can stick, time will give us the answer. But we don't have a crystal ball, so we have to come at this every day. Transports. That yellow line is just the share scope tutorial zone of interest we put on those back in May last year. I will say a year ago, we put more over a year ago. April, May, yeah, it was a year ago. We put these targets in the market pullback areas, and the market April, May. So back here, we decided that these were the big levels in the market to watch, and I've left them on the charts. They're still there. Pretty normal action. S&P 500, constructive. The bearish cases. This is a big bearish channel building, and we're going to drop through it like a stone. So long as it holds the lows, happy days. If it goes through the lows, yeah, we're in another potential leg lower. But this is the level in play here. Obvious level for the Nasdaq. Look at this big rising channel into double top. Everyone shouts. Yeah, a double top isn't really. It is a double top, but it's not really that meaningful. So it might look meaningful in the future, but this is more a double top of the highs there. I will always draw a line in the sand above a double top because I trade towards double tops consistently, don't I? Being a bet, well, I tight consolidations can only expand. I trade in the direction of the trend, and virtually everything I see on my screens, what looks interesting, will have a double top because I like to draw a baseline. So I've been trading towards double tops my whole career. Double top, draw a baseline. That's an area of interest above there. The trend is clearly up. DAX, we drew a double top. It moved through. It broke out. First pullback, viable pullback, higher high. It's like back to basics charting today. Yeah, the FTSE 100 is just the worst market you could possibly follow for any kind of technical sort of levels. It's just awful. And I always go back to this one here back in the 90s and say, look, the market can do whatever it wants. Take the high out, take the low out, take the high out again, take the low out again, take the high out, take the low out, take the high out, and then go on a trending run. So, this is why we drew this. Amazingly, it's playing out so far. But put the log scale on so you can see that. When comparing past with present, always use a log scale. So yeah, worst market to follow, obviously. 250. Now this is where you find some trending stocks what are on the way towards the FTSE 100. Ignored these, that's just some trend model explanations I was doing for my own site. So we've got a really lovely baseline in here, and you might say, well, this is a bearish wedge, and that's how we had it as that for a while. We'll see, excuse me, if it can hold up. Small caps, yeah, same again. We've got a line in the sand there. Very simple. Do we need to go to the AIM market? I know people kind of like to look at the AIM market. It's not that interesting. I'm trading the most bullish stocks I can find, and a lot of them will be in the AIM market. But I'm not looking at the AIM market for direction, because it's an awful market, an index to sort of follow. But that's what you can draw that line in the sand. The AIM market can take the lows out, and the other markets can hold, and there'll be good stocks found in the AIM market. So, I use the fully listed small caps. But the way it tends to happen is money flows into sort of the big blue chips, mega caps, whatever, and they get a bit frothy for a while, and then it will start. You get the old, the market's running on 5 stocks and all that talk, and basically you seem to get that in every move off the lows, and then basically what happens is you get rotation, and there's big calls made about the market's held up with 5 stocks, it's gonna drop, and this that. You don't really need to confuse yourself with all this stuff. If the money's going to rotate out of stocks into other sectors, and it's going to work its way down the risk spectrum, and it will always be that way. And then you'll be in a market where micro caps, blue sky micro caps, are making really nice trending runs, and everyone's going to be scratching their heads and wondering why. And then by the time the people who are scratching their heads decide that they better be bullish, then that's probably when they run out of steam and roll over again. Where are you on the market? Where are you doing business in the market cycle? Well, we're in a bear market. We've seen some green shoots. The portfolio is acting pretty well. I'm up over 6%. With 40% invested, and I've just I've added to a few trends. There's not that many out there, but they will start to roll up. If the market's going higher, they will just keep continuing to turn up in the right hand edge, and that's where you've got to exist. You don't get paid in hindsight. You don't get paid in you basically got to build into these things in a low risk manner, and let them play out. And it takes time. So that's the business we're in. So yeah, pretty mellow. It's holiday week, holiday reversals and all that will probably melt up tomorrow, just on thin market and people not wanting to be short over the weekend, and that would be happy days. That would be my prediction in a game where we shouldn't make predictions. Let's have a quick look in the volume leaders. When the computer's ready. So it is. There's not going to be many in here today, but it is 10:36. We should have traded 30% to be on average volume, and we've got 34 stocks. And should I do it in order of volume? I will do. So we'll just go through in order of volume. Very minimal screening on this this filter. In fact, the investment trusts aren't in the mix. I do like to look at them sometimes. I'll just put them in the mix. So we've got 42. I wish I could show you two screens because I'm looking for growth stocks and I've got no forward on all of these so far. In fact, I'm just going to reorder these by sector so I can do it a little bit more methodical. Investment trusts. Let's just buzz through these. Always look at the theme in these as well. Construction, electronics. This one's a lose more scenario with a very thin slither of turnover ticking up in the full year results, and yeah, though I do, I could draw a baseline here is what I'm saying, and we can see it's the potential right side of a base, but it's, I want to trade towards stocks with gas in the tank, and there isn't that many. When comparing the fundamentals on stocks, I'm a growth investor, and I don't do research on one stock and go, yeah, I like that. It's got growth. It's got this. It's got that. Well, I do that, but then I compare it with the whole market, and then I go, well, is it a growth leader in the market? Because you're going to find relative strength in your portfolio as a whole if you're in the growth leaders rather than just a stock with growth what you like. Potential right side of base for ZTF as well there, very steady on its numbers. Nothing's going to be too exciting in that one. Three eye. Last we looked at this one, we had a little base here and then we had the pullback here, and fantastic move on that one. Good swing stock. Always has been. Quantum blockchain technologies. Data. Now this one, it's media, isn't it? And it's got to tick up in its forward numbers. It will be, looks quite aggressive on its pre-tax profit. It's awful action. It's that just shows it's got no interest at the moment in it. And if it tightened up and got ordered, it's never traded nice, has it, this stock yet? But if it could change, get a little bit more interest and a bit more orderly, that would show you that it's not just private investors knocking the share price around. It's got a little bit more of a stronger hands. Not much to see out there in today's screen. Same. I've done the same with this one here, and it's kind of the same deal. It's just basing out, and it's it's kind of messy action. It is what it is. I'd rather see it punch through the highs here. An EasyJet, I don't trade. Well, I certainly don't invest in anything airlines, aviation related, but I do swing trade them sometimes. But yeah, we might see this in a. It's still, though it has, traded above the base. In this occasion here, it's kind of, looks like another base now, doesn't it? You might get a swing day on it. Maybe you'll get a swing day tomorrow, and it could sort of melt up from there. But yeah, educational purposes only. Investing in those. So yeah, pretty quiet out there, pretty orderly. It is a time where if you've got no routine and you've got no methodology, well, turn up and watch my videos. I'll try and do them a bit more often when the market's a bit more exciting. If you sort of hit the like button, then the algo will actually recognize that and subscribe to the site. And I think I've unlocked the comments on the videos as well, so I can keep track of the comments too. I've never done that before, but it's all new to me, YouTube. I just throw these things out there and thoughts on the day. So there we go. Pretty mellow out there. Let's see what the day brings. Okay.